Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is June 22 and we're starting from euro-dollar pair with Jakub Nowak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0931 on Wednesday afternoon, coinciding with the rise of MACD line from zero, prompted a buy signal that led to a price increase of over 30 pips. Euro rose yesterday morning due to the statements made by ECB members Joachim Nagel and Isabel Schnabel. Then it continued in the afternoon as the Fed reiterated the earlier comments of the Fed Chairman Jerome Powell. Upcoming speeches of ECB members Fabio Panetta and Joachim Nagel will likely lead to further growth, as they may be about inflation and Upcoming speeches of ECB members Fabio Panetta and Joachim Nagel will likely lead to a further growth, as they may be about inflation and interest rate. A rise in consumer confidence in the Eurozone may also have a positive impact on buyers' positions. Buy euro when the quote reached 1.0995 and take profit at the price of 1.1037. An upward movement may continue as buyers will return to the market. However, when buying, make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0975. But the MACD line should be in an oversold area, as only by that will the market reverse to 1.0995 and 1.1037. For short positions, sell euro when the quote reaches 1.0975 and take profit at the price of 1.0945. Pressure may not return in the future. However, traders could still sell when the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0995, but the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.0975 and 1.0945. We've got a more for euro-dollar pair by area of Mockmore. Let's have a look. On its 4-hour chart, EUR-USD main currency pair seems moving in a bullish condition, and it's heading to the level of 1.1032 as the main target and 1.1101 as the second target, where this is confirmed by the price movement which is above the SMA 30, as well as the formation of 1, 2, 3 bullish pattern, followed by the break of several Ross hooks. And most importantly, the CCI indicator 30 managed to break above minus 100 0, and 100 levels, as well as the CCI movement, which was often stuck at the minus 100 O and 100 O area levels and never managed to break below minus 100 levels, where this indicates a fairly significant support level. However, if on its way to these levels suddenly fiber corrected downwards, breaking below 1.0893 level, then all scenarios of a bullish rally as previously described will become invalid and cancel automatically. The next stage of our review is the next major, GBP USD. This trading plan is presented by Laurie Bailey. Yesterday, the British pound traded within a range of 110 pips, closing the day with a 5 pip increase. Such volatility allowed the price to hold below the resistance level of 1.2785 and the Marlin oscillator to stay in a downward direction. Today, the price has a chance to retest the support level of 1.2678 and, if successful, it may fall towards 1.2600. Consolidation above 1.2785 would allow the price to continue rising according to an alternative scenario towards the level of 1.2870. The next target would be 1.2940. On the 4-hour chart, we can see that the price's failure to consolidate below the MACD indicator line, there is a blue line on graphic, has brought the price back above this line. But now with consolidation. The Marlin oscillator is in a negative territory, so there is a possibility of another attempt to break downward. Today, the Bank of England will make a decision on monetary policy, and a 0.25% rate hike is expected. However, consulting agencies suggests that this increase is already priced in, so investors will focus on the central bank's further plans. Gold, sweet gold. We got a trading plan for this commodity asset presented by Petar Yakimovic. Gold has been trading downside as we expected, and Petar found the rebreak of the symmetrical triangle pattern, which is good sign for further downside movement due to the breakout of the upside channel and tight triangle in the background. Petar sees potential for the further drop towards lower references. Downside objectives are set at the price of 1861 and 1890. MACD oscillator is showing increasing downside momentum, which is good confirmation for the further downside movement. Key resistance is set at the price of 1967. And finally, we've got a trading plan for USD GPY currency pair Dimitrios Tsoupas describes. Early in the European session, USD JPY is trading around 141.70, below the 21 SMA, and below the 7-8 Muri level. We can see that the Japanese yen is inside an uptrend channel formed since June 8. The yen shows weakness against the US dollar, so if it breaks and consolidates above 142.00 in the next few hours, we could expect it to continue rising. USD JPY continues with an upward outlook according to the H4 chart, but is it at a crossroads, but still unable to consolidate above 142.24, 22 November 2022 high. If USD JPY surpasses 142.24, the next resistance will be at 1.43.52, the price level of October 5, 2022. The instrument could reach 8-8 Muri located at 143.75 and even reach the psychological level of 145.00. On the contrary, in case USD JPY breaks the uptrend channel sharply and consolidates below 141.50, we could expect a bearish movement and the price could reach the 6-8 Muri level at 140.63 and finally reach the 200 EMA located at 138.97. Investors believe that the Japanese government and the Bank of Japan are likely to take action if the Japanese yen continues to weaken and reach the 145.00 level. The Eagle indicator is in a neutral zone and has some distance left to continue giving a positive signal, but we could expect a bearish move if USD JPY breaks below 141.60. On the other hand, above 142.00 the signal could be positive, and USD JPY could continue its upward path. Our trading plan for the next few hours is to wait for Japanese yen to break out of the consolidation zone and give either a positive or negative signal. In this case, we expect a clear signal to sell below 141.60 with targets at 140.63 and 139.06. That's all for today. See you online soon. Good luck.